Happy Friday, everyone. As you know, on Fridays, I will be answering your tax and financial questions. So if you have any you would like us to answer, go ahead and message me and we will address it at a later episode. Today's question is, how can I pay less in taxes? Now, I got this asked 3 times last week, so I thought that this would be a good one for us to cover today. Now, everybody wants to know, what is the tax secret or the silver bullet so I could lower or eliminate my taxes? So today I'm going to tell you there isn't a silver bullet. However, there are strategies that you can use. And I will tell you, there are 2 different tax rules. You're probably thinking, oh, one for the wealthy and one for the poor. However, it is one for the business owner and one for the employee. So what we're going to talk about today is what is deductible, what are business expenses, and we're going to talk about strategies that you can use so you can become a business owner. It's not going to be as complicated as you may think. First, let's talk about, this is probably one of my biggest pet peeves, is when somebody says, oh, well, it is tax deductible. And if you've been following me for a while, you know that we like to say that we do the math. So let's take a look at the math. Let's say you spend $1 on something that is tax deductible, so you are out $1. Let's say you're in the 40% tax bracket, so that means that you saved 40 cents of that dollar in taxes. So you started out minus $1, and then you got back 40 cents, but at the end of the day, you have a net loss of 60 cents. Now here's something I want you to seriously consider what your goals are. Is it to cut your tax bill today, or is it to have more cash in the future? I'm going to repeat that. Is your goal to pay the least amount of tax today, or is it to have more cash in the future? I say that, or I ask that, because oftentimes people are so focused on saving their taxes today, they're making financial decisions that will actually allow them to have less money in the future. If your goal is to have more money in the future, you need to start using products, which are things that you buy, and strategies, which are things that you do that are going to allow you to have more cash in the future. Oftentimes, those strategies and products, you may pay a little bit more tax today. But again, if your goal is to have more cash at the end of the day, that's when you need to use these strategies. Now, talking about the difference between employee and a business owner, employee is very limited on the deductions that they can deduct. The most that really an employee can deduct, personal deductions, are called itemized deductions, and those are basically going to be property tax, mortgage interest, and charitable donations. And of course, you want to be able to deduct all of the expenses that you can. But that's about it for what an employee can deduct. Now, a business owner can deduct a lot more. So let's talk about what a business owner can deduct. And to do that, I Googled what is a business expense. And as you can see, business expense from the IRS is to be deductible. A business expense must be both ordinary and necessary. That is a very vague term, which allows us to use that to our advantage. Well, let's take a couple examples. I don't know if anybody here has a car, but if you have a car, if you're an employee, you can't deduct it. But since the car that I use it for business, I am able to deduct it. This is what we call putting a business spin on an otherwise personal expense. Hopefully from that last example, you realize that we don't want to just spend money because it's tax deductible. What we want to be able to do is, if we are going to spend money, let's see if there is a way to deduct it. Another example is last week I went out to dinner with a good friend of mine. He happened to be a client, but I paid for the bill and I was able to deduct it. If he wasn't a client, well, first of all, he should be, but if he's not, that doesn't mean that it's not tax deductible. It doesn't need to be a client. It's all of the intent. Because he has a potential to be a client, that I'm now able to deduct that. An important message is that we do need to complete some sort of personal business. And if he's a friend of mine, and especially if I'm picking up the bill, he or she better ask me how business is. And then I will gladly share how business is doing. It now becomes a business expense. And if that individual or that friend or so-called friend doesn't ask me how business is doing, then he's not really a friend and I'm not going to pay the bill. Another example, if you're still listening to this, you are looking to continue to better yourself and to learn more. And for example, this book here is Robert Kiyosaki. He wrote Rich Dad, Poor Dad, which is a great book. This book was called The Cash Flow Quadrant. I'm going to talk about this more in a second. But if you're an employee, everybody should read this book. But if you're an employee, it's not tax deductible. But because I have my own business and I can use this in my business, it now becomes tax deductible. So the big question here is, how can you become a business owner? And it's not going to be as hard as you think. A lot of times we think business owner and we think that we need to have an office and staff and equipment. But a business owner just means somebody who makes money that's not on a W-2. Typically that's on a 1099. So that can be very easy to do. Now here's a couple ways to do it. One is to start a business. One easy way to do that is potentially having your employer pay you, if they pay you a bonus, see if they will pay you a bonus on a 1099. Now that income is considered part of your business, and you can start deducting proper business expenses against that income. You may have a spouse who's working part-time or maybe considering going back into the workforce. Maybe he or she can look for a job that will be paid on a 1099. And even if the employer wants to pay them on a W-2, it's not going to hurt to ask if they will put you on a 1099. It'll actually be in their benefit, because if they put you on payroll, they have to pay payroll taxes, which is about 10%. But if they pay you on a 1099, they do not have to pay all those taxes. And you will need to pay your own FICA tax, which we can address in a separate conversation. But what you can do is say, if you're going to pay $1,000 a month or every 2 weeks, you don't have to pay the payroll taxes, which is $100. So you can tell them, if you 1099 me, instead of paying $100 in taxes, why don't we split the difference? Why don't you pay me $1,050? This way the employer is saving $50 and you are earning $50 more. And now you've just created your own business. You may also be able to pick up some sort of consulting job or do some sort of moonlighting that will allow you to be paid on a 1099. Also, I have some clients that are starting a job or a business just of ideally doing something that they love. Maybe they're selling or trading items or collectibles on Amazon or Facebook. And if you read the cash flow quadrant, what Robert Kiyosaki talks about, the ways to become a business owner is to either start a business, or he also mentions buy a franchise. Now, when you're thinking about franchise, you're probably thinking about fast food. And ironically, a good friend of mine, who I respect a lot, Sarah Brown, wrote a chapter in this book that's entitled More Than Just French Fries. A franchise is in essence a business with a business system. Somebody has already created the system and marketing and proven that it's worked. All you need to do is buy in and to manage that business. So there is some food and beverage, but there's a lot of gyms and physical fitness going. There are service businesses, there are healthcare businesses. There's a wide range of businesses. If that is at all interest to you, I'm going to leave a link to Sarah's book in the comments. The next section, the next possibility to start your own business is to start network marketing. Now, sometimes, and rightfully so, that does have a bad rap. However, it has really changed over the last 10 or 20 years. Robert Kiyosaki even mentioned that of being a good way to start your own business. And if you can get it with the right company, with the right team, they're gonna have the systems to help you. And one advantage of the network marketing is that it is a very low cost of entry and a very low cost of time, which is all going to be up to you. Now, those are just a few reasons of how you can start your own business. And people are always asking me, how can I save money in taxes? I just want to summarize, is your goal to save taxes today, or is it going to be to have more money at the end of the day? And it's probably that you want to have more money at the end of the day. And if that's the plan, you need to start using strategies and products that are going to allow you to have more cash at the end of the day. If you have any comments, please post them. Any questions for next week, please let me know as well. And if you're interested in learning more, the best thing to do would be to go to my website. It's anthonyfaso.com, and in the top here, you're going to see Start Here. And the Start Here is the link where you can download your Prosperity Pack. In here, you will get the ebook, the free ebook, Financial Planning Has Failed. You'll see a video of our 7 principles of prosperity, a summary sheet of what the principles of prosperity do, and probably the most important piece is our Infinite Wealth subscriber only mini newsletter, where it sends you articles and links to blogs that will help you learn how to build passive income and wealth outside of Wall Street. Thank you for joining, and again, any comments would be great, and please send me your questions for next time. Thank you, and go make it a fantastic weekend.